All right, let's dive into JP Morgan's 2026 market outlook. And really, if there's one word to sum it all up, it's division. We're going to break down the key forces they see shaping our global economy, and you'll see just how deep that split goes. And this quote right here from their head of global market strategy, this is the key to their entire outlook. It's not about one single trend pushing us in one direction. Nope. It's about all these powerful, competing forces pulling the economy in completely opposite directions all at the same time. This is the big idea we're going to unpack. So, what does multidimensional polarization actually mean in plain English? Well, think of it like a giant economic tug-of-war. You've got one part of the market absolutely booming, while another part is really struggling. You've got some economic numbers looking super strong, while others are flashing these big red warning signs. For you as an investor, this creates a really tricky landscape. It's full of hidden traps for sure, but also some pretty incredible opportunities if you know where to look.
Now, let's talk about the biggest driver behind this massive split, the absolute explosion of artificial intelligence. JP Morgan is calling this the AI supercycle, and you can think of it like a giant wedge that's just driving the market further and further apart.
You know, this isn't just about a couple of cool tech startups anymore. We are talking about a fundamental shift. Companies are pouring truly record-breaking amounts of money, that's the capital expenditure or CAPEX, into AI infrastructure, into new technology. And that fire hose of cash is translating directly into massive earnings growth for the companies that are leading the charge.
And what's really fascinating is how far the ripples are spreading out. I mean, sure, it started in tech, that makes sense. But now, utilities are getting a huge boost because they have to power all these new data centers. Banks are using AI to manage risk. And industries like healthcare and logistics, they're being completely reinvented from the ground up. AI is going from a niche tech to a core part of the whole economy.
But here's the flip side. Here's that polarizing effect. This boom isn't lifting all boats equally, not even close. It's creating a winner-takes-all market, where just a handful of dominant AI-powered companies are pulling way ahead of the pack. And this is pushing market concentration, basically the share of the market held by the biggest players, to record levels. It's creating a really stark divide between the AI haves and the AI have-nots. Okay, so let's zoom out from the market for a second, because this split isn't just happening with stocks. There's a very similar tug-of-war playing out in the wider economy, a constant battle between resilience on one side and some pretty serious risk on the other.
So JP Morgan puts a number on that risk, 35%. That's their official forecast for the probability of a US and global recession in 2026. Now, that's not a coin flip, but it is definitely high enough to show that the downside risks are very real. You just can't ignore them, even with all the positive momentum we're seeing from things like AI.
This slide just lays out that economic tug-of-war perfectly. On one side, you have these really powerful supports holding things up. You know, government spending, all that AI investment we just talked about. But pulling hard in the other direction are some serious drags. Hiring is slowing down, businesses are getting cautious, and inflation just seems to be stuck around that 3% mark. So what's the bottom line here? The crucial point is this. When you step back and look at the big picture, the global economy looks surprisingly resilient, right? Growth is still happening. But beneath that surface, the foundation is fragile. That tension between the good stuff and the bad stuff means things could tip over pretty quickly if the wrong kind of shock comes along.
So how does all this polarization play out on the world stage? Let's take a look at the ripple effects across currencies, central banks, and commodities. It gets pretty interesting.
I mean, look at this. This is that polarization in action. You have two of the world's most important central banks, the US Fed and the Bank of Japan, literally moving in opposite directions. The Fed is expected to start cutting interest rates, while the Bank of Japan is expected to hike them. This kind of divergence sends money sloshing across borders, and that creates major waves in global markets.
And those diverging policies? Well, they lead directly to these currency forecasts. JP Morgan is generally pretty bearish on the US dollar, expecting it to weaken against the euro and the pound. But they see it strengthening a lot against the Japanese yen, all the way up to 164, mostly because that big gap in interest rate policy is probably going to stay wide.
And then you have this. Wow. A forecast for gold to hit an incredible $5,000 an ounce. Now, this isn't just some random speculation. They see this being driven by two really powerful forces. One, central banks all around the world keep buying gold to diversify their reserves. And two, you have strong demand from regular investors who are looking for a safe haven in this polarized, uncertain world.
Okay, so let's pull all of these threads together. We've looked at the AI boom splitting the market, that tug of war in the economy, and the global ripple effects. What does this all add up to? Let's get to the key takeaways for 2026.
So here it is in a nutshell. JP Morgan is actually pretty positive on stocks, forecasting double-digit gains around the world. They see growth holding up, but with that 35% recession risk always lurking in the background. Inflation is going to remain a stubborn problem, the dollar is expected to weaken overall, and gold could have an absolutely massive year. This is the polarized world we're all going to have to navigate.
And that really brings us to the final thought. The whole report lays out a world of extremes, right? Of AI winners and losers, of economic strength, but also fragility, of central banks going in different directions. So the question it leaves us with is a really crucial one. In a world that's being pulled in so many different directions at once, where do you look for stability and strength? Where will you find resilience?